So guys, we're going to talk about interest rates for a minute and what that looks like when we're buying a property or selling the property with owner financing to a back-end buyer, and just things we need to be thinking about along the way a little bit. So if you find this helpful, take a minute and like the video. Don't forget to comment below. We'll do our very best to answer those for you. And don't forget to join our YouTube channel where you get to see me all the time. That's both a good thing and a bad thing. Okay, so interest rates, buying a property. Well, if we're buying a house subject to the existing debt, it is what it is. You ain't changing that mortgage. Now, you might be negotiating a second lien with the seller. Okay, all things are possible. Principal-only payments, lower interest rates, whatever it might be, short-term loan, longer-term loan, amortized. It's just what works for that property based upon what that first lien mortgage is and the rates you're paying and the payment amount, as well as what you're paying your seller. And by the way, that seller could also be one of your private lenders out there instead of the seller that you substitute for. And when I'm looking at that, I'm always looking at what is my back-end strategy. Is it to rent the property? Is it to do an owner finance on it? Is it a fix and flip? It's a fix and flip. The rates and terms really don't bother me because it's going to be a short-term deal. You're not talking about a lot of money along the way. But if it's a rental, short-term, long-term, mid-term rental, or if it's a seller finance deal, yeah, now it's going to affect what I'm looking at. All things are important. When you go out to the mortgage and the DSCR world, their rates are going to be what they are based on your credit, things of that nature, based on that loan to value. Are you asking for an 80, 75, 70% loan to value, something less? All those can affect your rate. Your credit, as I said, will affect your rate. You go to a small commercial bank, it is credit, it's experience, it's everything, it's the prime rate. And banks are much less likely to adjust interest rates unless you are a major depositor with them and things of that nature that will help them offset their costs and expenses as well. But it is so important to be in tune to your cost of funds and how you work those with whomever your lender is. One of the things I like to discuss with my private lenders is that interest rate. There are some private lenders who think they want 10, 12, 14% interest rates. Got it. Good luck lending your money. Most likely you're not going to be lending it to someone like myself with more experience. Sometimes it's based on risk analysis on who that is. Sometimes these lenders just think that they can get that kind of return and the investor is willing to pay for it. I've been lucky, and I'll tell you over time, got my rates down to a reasonable rate. And I'll go back 100 years ago where my rates to my private lender was 18%. And I felt lucky to get that with zero experience, but it helped me start learning my business. Now, as I got more and more experience, that rate went from 18 to 14 to 12 to 10 and to 8%. Now, could I negotiate that down even lower? I probably could, but there's an old theory out there that it's okay to leave a little bit of meat on the bone for your lender as well. You know, does it really save you that much money making that 1 or 2% difference in rates versus paying your investor? If you want that investor to be there long-term with you, pay them a fair, reasonable return. You don't have to pay them some really high rate, 12, 14%. If you're paying them consistent, you protect them, you pay them back their money quickly so they can get it back, reinvest it, whatnot. That's what's going to make them happy versus getting a higher return. Now, not all people think that way, and especially not all private lenders think that way, but a lot do. From there, you know, negotiating that with your back-end buyer is so important too in your rates. And of course, I'm looking at that back-end rate as to, can my buyer afford that principal, interest, tax, and insurance number? I'm looking at how does that look in comparison to the rental rates. And it used to be that your owner finance number could be about 110% of your rental rate, and that still kind of holds true, but rents have not really caught up with the price of housing today. And all of a sudden, your owner finance number shoots up more than that, unfortunately, and it makes it hard. But if you're pricing that house too high, are people really going to come and look at it? Versus pricing it too low, obviously, where everybody's going to. You got to find that middle ground. And one thing I found in working with back-end buyers is that buyers are going to tell you, and the marketplace is going to tell you where you are. They're going to tell you whether the price of the house is too high. They're going to tell you whether the payment's too high. And you have to kind of start to navigate that down to the right price. If you don't do that, the house is just going to sit and sit and sit. And so sometimes it's easy to get that right deal put together. Other marketplaces, you have to adjust based on those market dynamics and stay on top of it. So when you're looking at interest rates, how it affects owner financing, buying, selling, everything else in between, stay in tune with it, run your numbers. If you're buying the property and negotiating, know what your back end strategy is and what you can expect and anticipate and how that's going to affect you. You know, if you're going to do an Airbnb type arrangement, know how many days a week you can expect that house to be occupied. Know what that income is going to look like to you so you can negotiate what you want that cash flow to be for yourself along the way. Again, as I always say, do the math again. Make sure you know where things stand. Do the best deal you can out there, and I think you'll find that helps you as you make those decisions. So guys, I hope you found this video helpful. If you did, take a minute and like it. Don't forget to make comments below. We'll do our best to answer those for you. And don't forget to join our YouTube channel. We'll see you guys next time.